Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Unity Software. Should we invest in this overpriced Metaverse stock for the future right now? Well, let's find out together. I'm going to go over in this video a summary of the company, its product offerings, recent headline news, financials, analyst projections, and I'm going to give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell for your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get 2 free stocks by using my referral link in the description down below. All right, so Unity Software operates a real-time 3D development platform. Now, its platform provides software solutions to create, run, and monetize interactive, real-time 2D and 3D content for mobile phones, tablets, PCs, consoles, and augmented and virtual reality devices. Now, it has 3 main businesses it runs. Its Create Solutions segment, which hosts its subscription-based game engine and its development tools for non-gaming markets. It operates Solutions segment, which provides an add-on service for usage-based and revenue-sharing plans, and its Strategic Partnerships and Other segment, which generates revenue from its partnerships with hardware and software makers. Now let's go ahead and look at some of the news of the company. Unity Software recently beat its third quarter targets, and they bought Weta Digital. Now, Chief Executive John Riccitiello said Unity plans to offer the Weta Digital tools to more creators. He said, "We're thrilled to democratize these industry-leading tools," he said in the news release. Now, the company says its technology could provide the foundation for the coming metaverse, and I do agree with that statement. All right, so in other news, Unity also recently announced the pricing of a $1.5 billion offering of convertible senior notes that's due in 2026 to qualified institutional buyers. Now, the initial purchasers granted a 13-day option to purchase up to an additional $225 million additional principal amount of notes. Now, net proceeds to be used for paying the cost of the capped call transactions and remaining for general corporate purposes and for acquisitions of strategic investments in complementary business or technologies. Now, let's go ahead and look at some of the fundamentals of the company right now. So the stock is currently trading at about $190.08 a share. It has definitely took a beating over the past day, and it has a whopping market capitalization of roughly around $56 billion. Now, the company is projected to have $1.09 billion of revenue for the end of 2021, but its projected earnings are going to be negative, about $480 million for the year. Now, the revenues are projected to increase significantly over the next few years to around $1.77 billion by the end of 2023, but it's almost projected to have earnings of negative $411 million as well. So just looking at those numbers tells me Unity is implementing a growth strategy over a profitability strategy, and I will definitely get into that in my analysis later. So looking at the evaluation analysis, the appropriate evaluation measure for Unity Software is the price to sales ratio. Now, the price to book ratio I excluded because it underestimates the company's book value by overlooking the hidden assets such as intellectual property. And while the price to earnings and price to earnings growth ratios are not meaningful right now because it has negative earnings, therefore, Unity Software seems highly valued with a price to sales ratio of over 50 times. That is one of the highest in the software industry. Now, looking at the growth rates analysis, Unity saw earnings decline in spite of positive revenue growth during the past 12 months. Additionally, the average company in the software industry was able to improve its earnings result over the same period. Now, Unity's revenue of 23% per year is forecasted to grow faster than 20% per year. But remember, the company's not forecasted to be profitable over the next 3 years. Now, looking at the financial strength analysis, Unity holds a substantial amount of cash and cash equivalents on its balance sheet. Though these liquid assets could be used for fuel growth, pay dividends, and limit financial risk. And its short-term assets of $1.6 billion, they do exceed its short-term liabilities of $579 million, and it also exceeds its long-term liabilities of $132 million. Unity has sufficient cash runway for more than 3 years if the free cash flow continues to grow at historical rates of about 13% per year. But it is important to note some of the negatives. Unity's insiders have only sold shares in the past 3 months, and shareholders have been diluted in the past year, with the total shares outstanding growing about 5.6%. So let me bring it back here. So what do the analysts say about this one? So the average price target of Unity software over the next 12 months is only $168 a share, with a high estimate of $185 and a low estimate of $130. Some have it at around the high estimate of $195. Now, going over the few of the analyst reports, the new Constructs Fundamental Analysis report recommends investors avoid Unity software and gives them an unattractive rating. That means they believe the stock has more downside risk than any upside potential. Now, the Street Quant ratings rate Unity software as a sell. Now, this is driven by the multiple of weaknesses, which they believe has a greater impact than any of the strengths, and could make it more difficult for investors to achieve positive results compared to most of the stocks that they cover. And the area that they feel has been the company's primary weaknesses has been a deteriorating net income. Now, the Forward Equity Research report has a hold recommendation on Unity software right now, and as a result of their systematic analysis of the 3 basic characteristics that they look at. I mean, they look at the earnings strength, relative valuation, and recent stock price movements. They said that the share price changes over the past year indicate that Unity's will perform very poorly over the near term. And the CFRA report has a strong sell recommendation on Unity, and it's based on the score of the CFRA's quantitative model for the United States. So am I a buy, hold, or sell recommendation on Unity software right now? Here are my thoughts. All the analysts are saying sell, 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 and the market is saying buy, 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 with the fear of missing out psychology dynamics in play, with the stock price being so high. Now, the market is reacting to the news around Facebook's Metaverse, and investors are scrambling to get into any stock that is part of the revolution. Now, we have to realize the company is the world's leading platform for creating and operating interactive real 3D content, and is one of the market leaders in the distribution of software that is needed to create content in the Metaverse digital world. So for the Metaverse to even get off the virtual ground, Unity's technologies are crucial. So what are the main points bullish regarding Unity right now? Well, it's the established market leader, its ecosystem that is built extremely sticky, and is growing faster than the gaming market itself. Now, the bull thesis is predicated on the fact that the belief that Unity will continue to grow faster than the global gaming market as it expands its add-on services and non-gaming tools. Now, I feel that non-gaming tools are critical virtual infrastructure that if I were Unity, I would be heavily investing in. Now, Unity is also improving its operational efficiencies and financial strength while the company invests in its future growth in an expanding market by utilizing a growth over profitability strategy. Now, Unity's financials, including the company's net losses, are significantly improving right now. Yet, when you look at the fundamentals, its valuation has become disconnected from the stock price. This is a drastic price increase over the past 4 or 5 months, 100% increase, based solely on the news that Facebook wants to be the metaverse. Now, don't get me wrong, I am bullish on the company. However, the stock has risen almost 100% over the past few months. Now, the metaverse industry will take years to fully develop. Now, when I see short-term extreme stock price movements in any stock without any justification in the company's underlying valuation, I see that as a red flag. Also, you have to look at the overall market trends in the future might bash the high valuation stocks like Unity or Tesla when the overall market has a major correction. And I do believe in 2022, we probably might see about 20% correction in the overall market itself, mainly hitting the companies with fundamentals disconnected from their stock prices. So based on all of that, I am a long-term bull, but a short-term sell recommendation on Unity software with a 12-month price target of only $190 a share. And let me explain that thesis. If you already bought into Unity in the past and have a long-term outlook, you can weather any stock correction in the near term. Over the next 7 years, if Unity maintains their growth rates of 25 to 30% per year, the company could be worth about $100 billion, about twice what it is right now. Now, Cathie Wood's ARK Investments do have a Unity software in their portfolio, but Cathie Wood's ARK Invest has recently cut down on some of their shares of it for profit taking and moved some of that into Palantir. Now, if you're a short-term investor who has not already bought into the stock may see a correction or even have a period of stagnation in the stock price until the underlying fundamental valuations of the company catch up in the market capitalization. But it is important to note right now that I looked at the options markets, and there's a lot more options buys than or calls than puts right now. So they're betting it's going to go up a little higher. And folks, the growth of this company could take a few years to happen, or even 5 to 10 years to go mainstream. Now, for those who are saying I'm wrong, here's the other side of the coin to consider. Companies like Unity and Tesla have become more expensive with the hopes that they will reach the stars quicker and quicker, and investors keep piling on. Now, if investors keep saying, I like the stock, then yes, Unity software will continue to reach the virtual moon, Mars, and eventually the stars. And it will not have any major price correction. But remember, what drastically goes up overnight can easily crash back down the next day. But if Unity can maintain its annual growth rate, like I said, of 30% per year over the next 6 years, it would be worth a lot of money, most likely, potentially, about twice the current valuation. So that's also something to think about. I'll just sum it up like this. Company is great and will benefit from the metaverse movement. Unity is cutting-edge innovation software company that is poised to continue significantly altering the video game industry and other industries with related technologies. They'll have to keep increasing its research and development, though, budget, and invest in more non-gaming metaverse platforms to keep growth going at the expense of profits until the industry matures in about 5 to 10 years. Unity softwares continue to expand and grow efficiently in a market that is set to become the next revolution. But I'm going to end it with this, with a question. Do we really want a world where there is a coexistence of the physical and virtual world, where you can lay down, put on a virtual helmet, and be at your beach in the Bahamas where your brain and senses are interconnected with the machine, getting your brain fried like Arnold in Total Recall? I can see if you're up in New York City, probably. Or would you rather be like us in Florida, living the dream where fantasy and reality meet? Hopping on that fast boat, experiencing real life, real sand in your hands, the real Bahamas 50 miles offshore, and swimming with the real sharks. Now, folks, only time will tell. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.